What is going on, everybody? I hope you guys are having an amazing weekend so far. It is Saturday, and I'm going to go over yesterday's trading session, talk about what went wrong, maybe what we could have done better, my idea coming into the session, and stuff like that. So let's just get right into it so we can break down yesterday's trade setup. So, yeah, I'm down 350 times 5 accounts on my TPT accounts. So, yeah, it was the first 0-2 day that I've had this entire month. So, it was a day where I knew I needed to get off and stop trading. It's like, I'm not seeing the market well. My models are not working here during the AM, which is funny because later in the session in PM, my overall draw on liquidity ends up getting tagged. It's just AM was a chop fest and I took some dicey trade setup. So that's what trading is all about, man. Being able to go back to the chart, see what went wrong, make corrections, come back next week fresh. So let me just kind of break down what my idea was. I was going into the day very bullish, okay? What I was looking at and what really stood out to me was that we were delivering out of this 4-hour gap here. So at this point, I'm looking for an internal to external move from this 4-hour PD array to the external high being the London high, which was my overall draw on liquidity, which ends up getting hit later in the PM session on Friday. So I was bullish coming into the morning session, looking for a long setup that I can trade this market into. So what ends up happening here, I'm just going to delete this breaker right here because that's the second trade setup of the day. So as you can see down here, we get a very nice SMT out of that 4-hour fair value gap that I just marked out. So down into here, we're in a 4-hour gap. We get a nice SMT between NQ and ES. And I'm starting to look for a trade reversal towards that London high. So London high is resting up here. But even before that, I was immediately drawn to this wick high being that first swing liquidity point that I would want to see the market really trade into. So that was my idea. I would have been very satisfied with taking a trade setup out of here into this blue line, which would be probably my final TP. Now, the higher draw is London, but I don't need that many points. I would have been fine with this blue target. So for purposes of today's lesson, first draw on liquidity, second draw on liquidity. So we have options to the upside. I want you guys to understand, I saw these liquidity points. And I'm like, okay, let's look for a reversal out of the 4-hour gap down here, targeting higher. Okay, so that was my idea coming into the session. Now, if we drop down over to the 1-minute time frame, I'm just going to delete a bunch of this. Okay. We get the SMT at the lows, right? The first presented inverted fair value gap happens right here. Now, in hindsight, that probably was the best trade of the AM session right here. Okay, this trade setup right here ends up delivering, let's see here, about 114 points off of that inverted fair value gap model off the SMT. We didn't take this trade because this is not my trading session. 9 in the morning. I'm not even trading at 9. I'm trading at 9:30 opening bell, so I didn't have an opportunity to even trade this. So if you guys took this, congratulations. Now, what I was looking at was after we V-shape recovery and we form the SMT down here, we get an explosion to the upside. Okay? Very nice explosion. Now, on the, I believe, let me see what time frame we're trading this on. The 30-second time frame, I dropped down, and I like this pullback. I like how we get a V shape out of here as well. I believe we were also tapping into, there's a tiny gap I believe we traded out of here. Might have just been an order block. So we formed this order block here. Okay. And it's a higher time frame order block. So I'm like, all right, let's see if price is going to respect it. And it does. Okay. So it comes up and it rips. Now we get another, change in the state of delivery up here. So the market's just starting to spool to the upside. I can't mark it out for some reason. There we go. The market's starting to spool to the upside. Now, I'm interested in this inversion gap as a retest play for upside. And the market ends up pulling back down into here. Okay. And I'm looking right here on this bounce, this first bounce on that inversion. I'm already looking to take this trade on. So we end up executing a trade here. Right around here. Stop loss is going to be below this final BPR down here. If this flips to the downside, I'm getting stopped out. Okay. Targets are going to be up here at that first swing high that I talked about earlier in the video. So that was the idea here. Everything looks pretty good, pretty solid. But the market just was not ready yet to go higher. So we end up taking a quick stop out though. I actually did not let this go full stop. I believe the market moves higher and then boom. After this failed here, I'm going to show you guys kind of how I saved money on this trade. Once this inverted like aggressively to the downside on the 30-second, I was out of this trade around here. So I end up taking, I believe it was just around 20 point stop, which is right here. Minor. I lost like 80 bucks. I was running a micro on this trade. It is what it is. We took a quick L on that. It just did not, it did not work out. The market needed more liquidity. So 0-1 on the first trade. Okay. Then the second trade forms. And let me bring price up here. Okay. Okay. So now we're looking at a 3-minute. Let me see what time this was so I can go back to the, so at 9:30, we have a 3-minute bullish breaker block here. Okay. So we take this, swing high, low, massive breaker here. Now, I am looking at this breaker. This is a 3-minute breaker. I'm liking what I'm seeing. We have a low, a high, a lower low, and a new higher high, creating the breaker block. Okay. So this is our liquidity sweep down here. Okay. Into that old BPR. So here's our money sweep. So I'm getting everything I'm looking for in my model. I'm getting that low, the high, the lower low. That's the money sweep into a BPR. I'm like, this looks pretty good. Into a 1-minute BPR down here, which is a balanced price range for people that are going to ask in the comments. So we come down and I'm like, oh, okay, this looks pretty good. Form the breaker. Now, I'm looking for an execution on the tap of the breaker for higher. Okay. Just like this. Stops really wide in this example. London highs up here. Now, looking back hindsight, I wish I would have waited for this market to come a little bit deeper so I can get a better read on this breaker was going to hold or not. Okay. But we end up getting stopped out almost immediately on this trade, and the breaker just does not work. Stops out immediately. At that point, I was done. I'm like, all right, I'm not seeing the market well, but looking back at these trades, I'm really not too upset. I think the second trade setup, I could have been better. I don't think this was the cleanest 3-minute breaker setup that I could have taken by any means, but it had pretty much everything that I would look for in a breaker model, right? We've got the low, the high, the lower low, the higher high. We've got the money sweep. We're delivering out of a breaker. We've already had an SMT. So the market's telling me that this is a great support level. We're delivering from a 4-hour gap. I'm like, all right, let's try to catch this breaker. Now, looking back, this breaker is too big. I really should have, like I said, waited for CE of the breaker, see how it react down here. We kind of front run the breaker here, took the entry here, with target being the London high. Okay. Now, again, there's 2 ways to trade this stuff. And a lot of you know that you can either take the retest of the breaker for higher or wait for CE for a better entry. So there's no wrong way to trade this. It just doesn't end up working out. But as you can see later in the session, I believe it happens like right after this. Finally, the market, it just whipsaws again back into that old BPR. And this market ends up eventually ripping up towards my targets. And at this point, we had to watch the market go without us. I wasn't even looking at the market anymore, but you could see that it just really needed more liquidity to build up here. So basically, accumulation phase, and then this was kind of the manipulation and then a distribution up into here. Not the cleanest AMD model by any means, but the AM session just really was choppy, building up orders, and then eventually goes higher into the London highs. So that was my Friday, man. 0-2. Looking back at the trade setups, I'm really not disappointed too much in those trades. I think that I could have been better on waiting for another liquidity sweep on the second trade setup, which would have been this down here. See how we actually take this swing low, That's that manipulation leg, which is gonna be, in my opinion, the higher probability trade setup. And then what I could have done here is, I believe there was a 2-minute inverted here. That was really the only opportunity. Let me see here. Yeah, there was this big 2-minute inversion here. So we end up getting that inversion, and then this gap ends up holding for a while. Really wasn't the cleanest, but as you can see, out of this inverted fair value gap, we kind of chop and hold in between it. No candles are closing below the inversion. And then you get a quick little 2-minute inverted fair value gap here. Let me delete this so you guys know we're holding that inversion now. Then we get this inverted fair value gap here with a manipulation and a V shape around 1148, which is probably the tail end of my kill zone anyway. I wouldn't have been sitting around anyway looking at this, but just for educational purposes, this would have been then the best trade of that later session. As you can see, we invert this 2-minute, we hold inside of it. No candles are closing below this inversion here. Okay, respecting it, get a little manipulation to the downside, take liquidity, invert in fair value gap on the 2-minute, entry here, stops them below this wick low to keep it safe, TP up at the London highs, and you end up getting a full delivery there. So tough session for me, man, but it's about how you rebound as a trader. Can you come back to the charts, identify what you did wrong, what you did right, make corrections, and be able to fire off your trading model the next day? That is what I've perfected in my trading career. I can come in here, identify I'm wrong, see what I did wrong, and come back the next week fresh and reset the mind, the body, the soul. That's what trading is all about, guys. There's going to be days where you lose trades. I mean, we're not going to have 100% win rate with these models. It's just not part of trading. But what you need to do, you need to get back to the charts. You need to journal what's right, what's wrong, like we're doing here today. And now I know that I need to be a little bit more patient with my sweeps and identify, are we in an area of consolidation? Because in this session, we were consolidating. We had no breakout. I honestly would have been safer for me to even wait for the breakout to happen. And then I could have just traded like an inverted fair value gap continuation model, which right here ends up happening. I mean, even right here, we could have taken this trade setup, and this right here would have netted us a 1 to 2, 3, almost 1 to 2.5 RR trade. So sometimes it's better just wait for the market to break, then look for a continuation model that we have. So that's today's trade review. I hope you guys understand, or not understand, or getting value out of these trade reviews. Leave me a comment if you guys are enjoying it and you want more of these. And I'll see you guys in the next trade review video, man. Have a blessed Saturday.